Hello and welcome to the Wednesday check-in presented by the Gokhstein News Network. I'm your host, Landy, and today is November 5th, 2025. And, well, Bitcoin has hit one of the major areas that I've been discussing at length if the prior lows were lost. And that prior low area was really the major weekly levels, right? And while there was hopium that Bitcoin, could potentially, hopium to watch for, that Bitcoin could potentially hold up around the low side structure here at 103,650 coming into this 1272 fib extension. I had mentioned that my bias was that if it starts to get below the low, even $105,000, very highly likely going to head to the next big weekly down at 101 to $98,000. Now, one of the biggest things that we're going to discuss today is what to look for the bull side of trend and what we need to see for the bulls in order to pull off a rally from here that is sustainable, and what they want to see a little bit longer term as well, and what the bears want to see here and before we get to that, though, I really want to point out that this is not really that complex, right? This analysis that I'm presenting to you every Monday, Wednesday, Friday, of course, brought to you by the Gokhstein News Network and David Gokhstein. Thank you very much. I do appreciate it. But I really want to impart upon you that this is not difficult. We're just following the market and going to the next logical areas. And I want to reinforce this by taking a look at a very simple analysis that I did multiple times through different confluences on Monday's video, right? And I'm just going to play a short clip here. So if you missed it or if you want to go back and rewatch it, that we were talking about this area. This was the main area we were talking about to the downside to it. Now, this was 98 to 101 on the weekly and the daily, of course, on this low. So essentially where Bitcoin is sitting right now is on a high volume area. The next highest volume area is going to be right around the 101 area right there, which is this daily level, which is also a weekly close open, high or low, right? And that's going to be right around this next node of volume into the actual $98,000. So 101 to 98 is right around the top side of the highest volume area of the prior range. And then we have the point of control, or the highest volume traded area at right around $96,000. You can call it 94 to 96. Some people will split the difference, like myself, at 95, because some derivative exchanges and some spot exchanges will be ever so slightly different. And then some people just like the aggregate index for it. But in this case, if that area was lost, where do we look? Well, the next bigger area that we're going to run into is going to be right around $89,000 to $90,000, right around the low side of this structure. Of course, there is some weak. So point being that this isn't really overly complex. We're just looking at trend, and then we're looking at prior trend for areas of interest. And you work your way when prices headed down from the high side of structures to the low side of structures. Very, very simple. And on the way back up, we look at the low side of the structures that price is approaching to the high side. And more recent price action is going to be more relevant, but we do want to be aware of historical areas of interest. This was a big one. And I did want to point out, I did show this chart on the timeline as well. This is the 6 hour, and just how beautiful and how clean it was. We've had this chart up since those important areas were carved out, right? So we've been building our chart based on those closes and those swings. And on the way back down, you can see just how cleanly Bitcoin, traded back to and then inside of 118, rejected it. And in this case, dumped all the way down to another major level, which is also a weekly and a daily level, right around 107 to 108, right? And then bounced all the way back up to a nice little swing low, and then rejected right around the overhead resistance, which was a major level, right? Came back down to the weekly. Inside, there is some dailies, and then shot right down to another weekly. So this was a weekly higher high structure, and then a weekly higher low that was local. Rejected this weekly, dropped right down, and closed right on some dailies, but did drop down to a major Fibonacci level at a 27.2% above the prior high here, which was the prior high being macro cycle, being $69,000, 27.2% above, is right around 103,650, 103,660, depending on your chart. And then, of course, rallied back up, tried to reach up above. Once it started to come back down and find a base around the major weekly, rallies up, sits on the dailies, rallies up, starts to close above the weekly, runs into some daily resistance, closes above that, tries for the major overhead resistance, 116 and 118 on the bottom side there at 116. Can't quite get there, starts to close right on it, swing into it, and then sit on the daily, so on and so forth. And there's track right back to the weeklies, and then the daily front run, and then the inside structure for the weekly at 109, so on and so forth. And then the next weekly, and then the rejection at the dailies inside of a major weekly, come back down to a big daily weekly level, lose the low, come through and try to hit the dailies here, reject them, and then right down to the major fib level again, and then right into the pocket for the next big area of liquidity. And that's between 101 and 98. Look, not overly complex, not overly difficult. I'm not some genius. I'm just following what the chart is telling me and what price action is telling me about where things could potentially head next. And all we do is set conditions based on that. Now, one of the things that I am going to take a look at today and is trend, right? We know that 101 to 98 is a big area, right? This is a big weekly level. Now, we did already, break structure on the weekly. So let's just remind ourselves of where Bitcoin is right now. We can use that. Yeah, the low is fine. We'll keep that one on there. And we'll just use, some really simple stuff here. But if we go look at the weekly, we lost the higher low on the weekly. So now we're next. We lost the higher low, which was already a reclaim of a higher high, right? In terms of closing structure here. And you'll have to forgive this. This is something else. But in this case, what did we see, right? We saw that when we closed inside of this candle structure, yes, we did get a nice, we got a little bit of a lower high close and then right back to higher highs. And then it was right back to the weekly structure, right? Right on top of this high. And then now we've seen that we did paint a lower low swing as it relates to this close over here, which was at 108.250. We painted a lower low swing with a higher low close open, but failed to close the actual higher low, right? And that lower low swing was the warning. I did talk quite a bit about this a couple weeks ago. That was the warning that if it does not close the higher low close, because that lower low swing is in place, that that this can't turn out to be a bear bait. It's going to end up turning out the other way. That's what we saw. Now we're at the next major level right here around this weekly higher low structure, right? On a close and a swing, that being 98,225 to right around $101,000. And of course, there's some confluence with some other structure that's over here. We also have an important area in terms of volume at 102.5 in here for weekly closes. And realistically, this is an expansion look on the weekly. So we've already gotten the daily expansion that I talked about. And if we do see a close below the lower second, and I do mean a close, we did spike the lower third, right? And if we do see it close below the lower second, which is right around 104, excuse me, right around 104.3, I would say more towards 104.5 is kind of where I would put that. Because if price does trade back towards it intra-week, we will see the lower second kind of move up towards the 104.5 area. This would be expansion. Now, expansion on the weekly is expansion into support until the support fails, and then we get the next expansion down. But this would be a bearish expansion. We've already hit the main support area between this low side structure and this high side structure on a close. If we were to get that expansion, we'd be looking for a breakdown below 98,225 to start looking for those additional targets around, 94 to 96, split the difference at 95, and then eventually over here to 93 and a half to 89 or upper 80s, right? We could even incorporate this lower high, there that was kind of equal to the swing low over here at around 89. And then you start getting into the upper to mid $80,000 regions, $85,000, $86,000 by this high. That would be expansion into those areas, but you take it one step at a time, right? It can throw wicks on the daily, but true continuation of expansion is on closes. So a close below 98,225, close below 95, close below 93 and a half, close below 89 would be targeting those others. We could, that would be the continuation of expansion, which would be pretty bearish, right? Quick wicks to the downside, fulfilling some of those targets in the mean term that don't kick off expansion, have a very high likelihood to reverse and then try to go back up to the opposite side. So right now we're in a very tight compression on the weekly, and unless we see not just a close below the lower second, but a close below 98,225, you have to be very aware if you're on the bearish side of the trade that it could come right back at you, right? But if we do start to see this break down, especially coming into weekly closes, and then track the dailies for further downside if it is breaking down for possible just wicks and swings and liquidity grabs, you have to watch that if you're bullish. So the bears and the bulls have opportunity here, especially after hitting a major area. But what do we need to see on the daily to kind of change the look for the bulls? Well, we're in a downtrend. Right, we chopped around, went trendless here on a major area of support between a weekly high side structure on the low side here and a weekly higher low structure. So a weekly high side structure being the high side structure over here, and then the weekly low side structure over here, and then of course over here. Now, that is going to, or the weekly low side structure was just hit, rather. This was the weekly higher low right in here, which is right basically just below the last weekly higher high structure. But then there's other higher high structure over here that was lost. So we test the higher low weekly. Yes, this was a lower low on the daily, but building divergences and then slingshot after creating new trend, lower high, higher low, higher high, higher low, boom, up and breakout. But in that case, this was still a higher low in the weekly after the recovery from the 74,429 or 74,420.69 spot price low over there. Now, what do we need to see for the bulls here? The bulls need to see the lows hold. So in this case, you can give the bulls room down to the current low, and even this weekly down here at 98,225. They have a little bit of room. It's not much, but they need to see closes inside of this structure here. Right, so the bare minimum need to see closes inside of the 98,225, or else things are gonna, fall a bit more to the next big areas that we've talked about. The high side and low side structure on some exchanges is going to be right next to each other for this particular trend over here for the high, and then the low that came in at 98,225, because essentially this is $98 or $98,000, right? And then we took off to $100,000 after putting in a higher low there. Now, this current low, if this holds and this weekly holds, what do we need to see? Last lower high get taken out. And this is currently at 111,221. Okay. That would be a trend break in this case. And essentially there's a few ways that this could play out. We've talked about a trend break and what we want to see prior when this trend was forming over here and then needed to hold this higher low. If it didn't, warning was that swing low with the higher low close. We did get no higher low close here. It was actually rejected because we didn't close above the swing, which is just above, it's right around the highs here, right around 111. Now we need to see a close above there to break the trend. So what bulls want to see is the low hold, and for this particular swing trend to begin to break, right? So either go up and break it and then come back down for higher low or equal low structure. as long as it doesn't pass this low. And you don't want to see a lower low. So realistically, it's going to be, you don't want to see if it does trend break from here. You need to see the current low side swing structure hold and then come in for some higher lows and then take out, wherever the new higher high would be as it relates to, 111, 221 there. The other way that we could potentially see this play out is, for the bulls and what they would want to see, I should say, is somewhere, you get another lower high or something, right? Get another lower high, come in for higher, lower, equal low structure, right? And then, you get above this lower high trend break. So you get a trend reversal set up to trend break or a trend break above, right, to trend reversal setup. So again, this would be a trend break to trend reversal setup. That's what the bulls want to see, is either that scenario or, another lower high and then a trend reversal setup to trend break of that lower high. Those are the two scenarios that the bulls are looking for. Bears are looking for either continuation, right, from here, or they're looking for another lower high, right, that results in a lower low, right? So that's what the bears are looking for, is either continuation through this low in the current candle setup, or they're looking for a bounce to a lower high and then lower low, lower high to continue the trend, right? That is the setup as it currently stands right now. And what is the criteria for even setting a low here? It's actually pretty straightforward right now. For this Thursday session, which is open, of course, still Wednesday for me, closes above 104,550 would set the low. Again, it's a lower low in a downtrend, right? So we did have a bit of a higher high structure here to a lower low swing with no closing higher low. So it's really a swing higher high, swing lower low, closing lower high to lower low structure now. So that's really where we're at right now. And in order to close this low, we need to see a close above 114, or 114. Man, I'm so sorry. It's been a long day. I've been talking all day too. 104,550. That's the big area. So if we see the Thursday or Friday candle, the lows hold here, and then we see closes back above 104,550, then that would be low closed. We can start looking toward, back up towards the low side structure on the daily. There's the low over here from 105.7 to the low over here, which is right above it at 106.4. And then anywhere above there, we're looking towards that weekly 107, 108, and then above there, 109 to 112 being the biggest areas of interest. And of course, do note that the 111, 221 is inside of this weekly structure, this weekly higher high structure over here between 109 and 111. And I'm going to really mess with your eyes by turning on the support and resistance areas of interest just to kind of drive that point home, right? We perfectly rejected off the 107, 250, and then it was down right after already testing this area and grabbing liquidity in this area on the candle before. It was really down to the next big area of liquidity. And I know it's a mess and I apologize, but it's really just to illustrate how these areas are all overlapping up here. And it's really about regaining, and you can see the basis band is in there and then taking out that high, but we still need to see closes above the 112 right here by the upper first. And that would look, better for the bulls to at least get continuation back here, maybe even run this zone 116 to 118 again, and then we kind of evaluate things. But right now, this is still a move in progress until we see a bit of a structure change. This is also expansion on the daily. If we are still down here, especially trading anywhere below this 105, 104 and a half to 105, that's going to be looking like weekly expansion, to be quite honest. And very highly likely looking for retests of the downside here And then on any breaks, we're looking for that further expansion into some of the structure over here, and then low side structure, right? Some of the mid structure, point of control structure in here, and then the low side structure, right? So just be aware of that. And the other thing, bears, you have to be aware if they start closing back above, 104.5, 105, we are really looking at the possibility that if they get anywhere above the 116, I know that many of you would want to go short, but they could totally run it right back to the highs and higher. Doesn't mean they're necessarily going to break out of the consolidation structure, but you do need to have that consideration on the table for you. So that's one of the reasons why I said I'm not as into calling the top this cycle. Things are a little bit different. Not a fan of the prior weekly high reclaim stuff that's going on here. But we got to see how things play out. Many are expecting this to just straight up roll over. And while that is a distinct possibility, and we roll over and go into an intense bearish period that some might even term a bear market, we need to see a higher term time frame structure break in order for me to call it now. And I'm willing to be late to that call. Unlike last cycle where I was very early to those calls. And I think it's worth tracking and trading the moves as they stand right here in front of us and as they present themselves. So I will happily walk you through either scenario. And I hope that you join me again on Friday and you like and share this video out there so people understand kind of, at least if you value my take on the markets, where I stand on this. And I hope that you learn a little bit about how to take a look at this for yourself and form your own opinion, even if it is different than my own. And I do want to point out that you should listen to people you disagree with. I don't care if you don't like that they're bullish or bearish. You should entertain what they're saying and come to your own conclusions utilizing your own research as well, right? Don't let others do the thinking for you. And especially don't let others do trading for you. Trade it yourself and trade it based on your own thesis. All right. You have a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe. And of course, as always, stay safe. With all that being said, Landy out. I will see you on Friday. Take care.